There's a current theme in the UK at the moment, and that is we're absolutely smashing it. Just look at the past 12 months compared to the mighty USA, or the rest of the world for that matter. It's a topic that's been covered ad nauseum by other creators, but what if the current analysis doesn't paint the full picture? What if we're missing something that could be hidden in plain sight? A diamond in the dirt, just waiting for you to come and pick it up. Let me explain. For those of you not familiar with the current landscape, let me bring you up to speed. The last 10 years or so have been dominated by technology and the advancements in AI. Nothing illustrates this more than the tech giant Nvidia. Just 10 years ago, they were valued at 69 billion, respectable. But today, they're valued at 4.5 trillion, with a T. The technology sector has been the place to be for rapid growth. And that brings us to our first question. Is technology still the place to be? To get a better idea, we need to zoom in and see what things really look like at the moment. Let's look back at the past year. These are the two charts that have sparked this recent debate. This is the S&P 500 and this is the FTSE 100. You don't need a PhD in finance to see who's had the stronger run recently. We know the US market is heavily weighted in the technology sector, so let's look at tech specifically and see how that's performed over the past 12 months. This is the year-to-date chart of the Nasdaq 100, 100 of the largest tech companies in the US. As you can see, this chart looks very similar to that of the S&P 500. And given the distribution of the US market, I think it's safe to say that the two are heavily correlated. So if technology is underperformed over the past 12 months, what's caused the positive returns in the UK market? I've borrowed this chart from Damien, who has a fantastic YouTube channel. Let's face it, if you're in the UK and you have a passing interest in personal finance, chances are you already subscribed to his channel. I'll leave a link to his recent video in the description below, and while you're down there, you might as well hit that subscribe button. Anyway, this chart expertly shows that the UK sector distribution looks very different to that of the US and the rest of the world. While others have a large focus on technology, you can see that the UK is primarily made up of financials and services. Rather than focus on what's fueled the UK growth, I'll leave that to Damien, I want to project a little and give you some things you perhaps haven't thought about yet. There are two main themes that will likely dominate headlines for years to come. The first are the geopolitical tensions across the world. From war, global tariffs, supply chains, the disruptors from emerging markets likely to influence the global tide in years to come. This constant noise and turmoil lends itself to a credible argument that volatile sectors, such as technology, may be in for an unpredictable short-term future. Maybe investors are consolidating, de-risking, or just taking profits after a great 5 or 10 years. That could explain the recent rally that gold's had, for example. And that links nicely to the second theme, AI and technology. We've seen from the charts earlier that technology has had an indifferent year, but that's to be expected, right? Highly volatile sector, perhaps companies haven't really performed over the past 12 months. So let's just have a quick look at some of the earnings of the large cap tech giants we're all familiar with. Let's start with Nvidia. 68 billion in revenue, 43 billion in profit, huge growth led by AI and data chips. Then we have Apple, 144 billion in revenue, 42 billion in profit, record quarter driven by iPhones and services. Then we have Microsoft, 81 billion in revenue, 38 billion in profit, and Alphabet, 114 billion in revenue and 34 billion in profit. Well, that's strange. That doesn't quite sound like the rough year you were probably expecting. In fact, some of these are record profits with healthy balance sheets. So what gives? Here's the part that most people miss. The market doesn't reward companies for being good. The market rewards companies for beating expectations. And over the past 5 or 10 years, expectations for US tech have been sky high. When you dominate global innovation, you lead AI infrastructure, and you become essential to the global economy, you don't just have to perform well, you have to consistently overperform. And sometimes Record earnings with incredible balance sheets aren't good enough for the current environment we're in. So what we may be seeing right now isn't a weakness, it's just digestion. After an incredible run, the US market could just simply be consolidating. Meanwhile, in the UK, it never had those extreme expectations to begin with. In fact, many see the UK as cheap or a great buying opportunity. History has shown us that markets move in cycles. Growth leads, then value, perhaps defenses, then innovation. The UK market, heavily weighted towards financials, energy, commodities and global exports, naturally benefit when interest rates are high, commodity prices rise, global uncertainty increases and investors seek cash flow and dividends. And guess what? That's exactly the environment we've been in. So maybe the UK isn't winning a race because we've picked up speed. We're just running a different race. But what if the UK can capitalize on everything we've discussed and quietly turbocharge its economy without touching technology? I discussed in a previous video that the current use of AI is focusing on workflows and productivity. AI is becoming cheaper to implement, and companies are in the process of restructuring to accommodate this. Referring back to the sectors that dominate the UK market share, financials and services are primed to benefit from the productivity boom that AI can offer. Faster analysis, deeper research, effective planning. AI not only lifts the floor of these sectors, but it also enables them to explore areas that weren't previously possible. The UK doesn't need to win the AI race. It can adopt the innovation coming out of the US, effectively reaping the benefits, but without the valuation risk. The growth may not be as explosive or rapid, but perhaps maybe more steady and predictable over the long term. So who wins, the UK or the US? Well, I think that's the wrong question to be asking. It shouldn't be one or the other, but rather how can one help the other? The US is still the innovation engine of the whole world, and the UK may just be perfectly positioned to take advantage of the current environment. So the diamond you're looking for isn't the country that's trending. It's the one that's consolidating, or perhaps the one that's ready to take advantage of whatever comes next. I'll let you decide which one that is. And on that note, I'll catch you in the next one, guys.